Anand Shah, Head PMS and AIF Investments at ICICI Prudential AMC joins us now. Anand, hi, good morning. Great speaking to you. This is a tricky time in the market. We saw a large sell-off yesterday. But what's your best guess on how things would play out? Do you think 2024 is going to be a tough year for equities? Or do you think that, it's going to be smooth sailing irrespective of the kind of large events that we have upon us?
I think the last year has been surprisingly good. Not many people, under the backdrop of a macro challenges that we had globally in particular, didn't expect market to do so well. But I think what has worked for the markets have been underlying earnings growth rate. I think earnings growth rate remain resilient. On the contrary, in some of the segments of the market, they're surprisingly positive also. So if you see, a lot of underperformance has been where the earnings surprise has been negative, but otherwise, given there are domestic flows also compensating for the FI outflows that we saw last year in earlier months, that has also turned. So to some extent, we have some bit of positivity from the FI flows also towards the end of the year.
All right. Hi, Anand. Good morning. Anand, I'm just looking through the portfolios, and you'll have some exposure to HDFC Bank. The market clearly wasn't impressed by the numbers. What do you do at this point of time, though? Because across portfolios, there is some exposure out there, and it's a quality bank. But in the near term, maybe earnings growth will not be as much as earlier anticipated.
No, indeed. I think we've been underweight HDFC Bank for a very long period of time. And clearly, look, while the results on the broader numbers were still comfortable, I think again, as I said, the large corrections have been because the expectations were fairly different from what actually the banks have been able to deliver. So I think we've all along were predicting that the tall task of getting the deposits would be a challenging for any bank, and that's what has been happening. The entire banking industry is today struggling to get the deposits going. The costs of deposits are not cheap anymore. You're losing CASA also to a large extent as the difference between the savings rate and the deposit rate is very high. So I think everything revolves around, for the entire banking industry, has been the cost of funds under the the broader framework that the credit growth has not been extremely strong that they could pass on all the cost of funds to the borrowers. And to that extent, you should expect some bit of NIM pressures, even for the larger banking industry as well, in next couple of quarters.
Okay, by the way, the stock in focus right now is LTI Mindtree. Just look at the way that stock is moving. I mean, it's down, I think, about 10% and big moves coming in terms of volumes as well. The numbers, of course, as we know, were muted, but I think the management commentary was very weak, and that's what the street doesn't like. There have been a lot of brokerages that have cut their earnings estimates as well. Nuvama has cut their FY 24, 25 and 26 EPS quite sharply. Anand, I wanted your thoughts on what's happening in the tech space, because clearly management commentary is quite cautious, across the board. Nobody is saying that spends are picking up. Everyone's very cautious to give out any kind of guidance in terms of client spends, etc. Your thoughts on, as a in your portfolio, what do you do now? Do you sort of cut back on IT? Do you churn out?
I think we've not been owning IT for the last 1.5 years in our portfolios. And yes, till 2 days back, it would look like as if, we've missed out on a big rally. But I think from a fundamental perspective, while the stocks did rally in December and early January, I think what excited the markets was the bottoming out of the pain. But my take is, I think we relative to the rest of the market, still we are more focused on domestic economy. We continue to see that there will be challenges in the international markets where most of the customers of IT sectors still. So again, there's no qualms about quality of business, cash flows, return on equities. I think what would be challenging is a growth, whereas the domestic-led sectors have been growing much faster, and that's why they've been sort of outperforming the IT sector for the last 1.5 years.
All right, Anand, give us some themes, right, in the domestic sector. There are plenty of them. There's infra, there's cement, there's realty. Give us the theme that you're most confident on.
So we've been consistently been very positive on manufacturing, B2B, and then subsequently it also benefited the manufacturing allied businesses like utilities, logistics, even corporate banks. Even if you see our banking exposure is much lesser on the retail banks, more on the corporate banks, and to a large extent even the state-owned banks is something which PSU banks also we own. So I think manufacturing and manufacturing allied had a very tough decade run up to 2020. And what has changed for them is actually the China factor. I think China was a large exporter of deflation, which was positive consumer businesses but negative manufacturing. That's turning. The population is aging there. The government policy is also moving from manufacturing to consumption to some extent. So all that is working in favor for many manufacturing companies outside China, be it in Vietnam, be it in Bangladesh, and now more recently also manufacturing sector in India is benefiting as the pricing pressure from China is reduced.
Okay, all right. Thanks a lot, Anand, for joining in and giving us your take on the markets as well as on how you approach various themes. Looking forward to chatting up with you in the weeks to come.